This is our report for September 2023 economic report. The China economy is slowing down. Also, what happened is Fitch, one of the rating companies, has downgraded the United States credit. That's really bad news. And also they've downgraded the major banks. That is also bad news. The 10-year bond is at a 20-year high. Gas prices are rising as the Saudis expect to produce less gas. There's still plenty of money out there from COVID that's sort of keeping things positive, if you want to say it that way. People are concerned about the travel industry because people are now realizing they have less money to spend. As bonds begin to rise, it gets more expensive to borrow money. The NASDAQ has been down now for 5 weeks in a row. And the Biden administration looks to cancel about 800,000 loans. The savings rate is rising slowly. And in October or September, expect the student loan repayment program to begin again. That means about 40 million people who have not been paying student loans are to begin paying their student loans. That's going to have a real big impact on the economy. We thought we were through the debt ceiling problem. That's not true. We expect that in October, the President and Congress will have again a problem with the debt ceiling. This time, we expect that perhaps there may be a shutdown. Also overseas, BRICS, which is a consortium of Brazil, Russia, India, and China and South Africa, have gotten together. They're trying to produce a currency to de-dollarize the dollar. Keep in mind, BRICS has 31.5% of the world's gross domestic product, so this isn't really a joke. China real estate market's in bad shape. That has reflection upon us. The Chinese have devalued their currency to help their economy. And back over here, the FANG stocks, or now they call them Magnificent Seven, have not been producing that well along with the NASDAQ. There is potential for a major strike with the UAW, United Auto Workers Union. And we expect to know on September 14th, that would be a tremendous problem for America. Mortgage rates have hit a 21-year high. The average mortgage rate for a 30-year loan is now over 7%. MasterCard and Visa report that people are beginning to default on their credit card payments, which is also bad news. There is a new economic pact that was signed recently between the United States, Japan, and South Korea to sort of compete against the BRICS, which I told you about before. Real estate sales have been down. SoftBank, which is a leading software company, is releasing an IPO, initial public offering, for a company that they own called ARM. ARM is a play on AI, and they expect this to rival NVIDIA, which has done extremely well this week. The yield curve, which is a tool that economists use to get an idea on whether people have confidence in the future, is starting to get stable rather than inverting anymore, which means that's a positive sign. That means people are having confidence in things that are down the road, 5-10 years down the road, rather than things that are current. If the yield curve is inverted, that means that people don't have confidence. They only want to keep their money into short-term obligations so they can get out. They don't want to tie their money up into 10-year obligations. The consumer looks strong, but as I said before, that's really based upon all that money left from COVID. One good thing is the UPS strike has been settled. PMI, which is the Purchases Manufacturing Index, that gives us an indication on whether the purchasing managers, what their perspective on things are. In other words, if the PMI is high, above 50, that means the purchasing managers see in the future the potential that they're going to be hiring, they're going to be selling more goods. That's a positive sign for the economy. And also with the FTS, Sam Bankman, don't forget about him, he's finally on trial. He pleaded guilty. He pleaded not guilty. The Fed is meeting Jackson Hole, and the chairman of the Fed, Powell, says that things are going to remain the same. We don't expect an interest rate hike. I said that Finch downgraded the U.S. government and the banks. Standard & Poor's has done the same thing. So it's going to cost us more money to borrow. Now, traffic basically for new homes has been slowing up. Again, because higher interest rates, higher mortgage rates. So people aren't able to go out and borrow that much money for homes. Basically, that's a report. I'll be giving you another report next month. If you like the report, please give me a thumbs up and a yes, and have a great day. Bye.